This is our Forex blog for October 11th, 2012, and like we do most days, we want to use our currency meter as the first step of our three-step Forex trading system. Sort the currency meter from strongest to weakest, and you'll see the Swiss, Euro, and Pound are three of the strongest ones. The Yen is the weakest, Australian and New Zealand is the third weakest, and the dollar at this point is not very weak, it's fourth up. The real-time trend is on the top. Underneath that we have the 15-minute, hourly, daily, weekly, monthly. The real-time is made up of 5 different tools. This is the build your own trend, which works live only. You leave it running and it can set the different tools, weights, and percentages based on what you want, or you can use the defaults which are already in there. So basically anytime you see extreme strength, dark green, and it's above the 80 level, this is a very strong trend. You can see the 15-minute and hourly trend shift up around 3 o'clock. The daily trend and weekly is down. The monthly is up. Sometimes that happens. The best trades are ones where the majority of the time frames are in the same direction, like the euro. Real-time trends up, 15, hourly. Daily and weekly are down. The monthly is pretty strong. You can see daily shifted up around 6 right here. Or you can just trade the strongest versus the weakest, but it always is in your favor, in your odds, when all the time frames or the majority of them line up. The monthly is the least important to me. So basically you want to buy the strongest currencies versus the weak and sell the weakest versus the strong. The more time frames that line up, the higher your odds are. You can, on our software, click this button right here, and as long as each chart has the same color, if you scroll one of them back, it will scroll them all back. So this will allow you to kind of simulate trading. You can see the Swiss had a lot of strength at this point. The Euro did, as did the CAD. Between these 4, the CAD has more time frames that are up. The only one that's not up is the daily, and it looks like it's about to shift up, or at least it got less weak. So if you want to stack the odds in your favor, buy this strong CAD. Now, the only downside of buying this right here is it's already been up for 4 hours. You ideally want to wait for some kind of a pullback, a half an hour to an hour, and then see the weakness disappear, kind of like this. Let's say you have a lot of strength here, the weakness gets very little, less than the 80 level, and you want to assume that the previous trend will continue. So let's look forward in this, and hopefully we can find a little bit of a pullback. And you can see in this case, all right, so here's some weakness here. All right, at this point right here, 510, this would be a good currency to be looking to buy against whatever other currencies are weak. You can see the yen's weak, so let's take a look at the CAD yen, buying it right around 5. We're looking for a move up after 5. You can see, let's mark the time right here. 5 is somewhere around right here. Let's click on the bar. 514, 504. Okay, so you can see lots of strength, pullback. This is the 10-day moving average. It just broke from underneath above the 50-day moving average, the 10-day, and the 20 days right here. Major daily based support resistance. It's resistance coming up to it from underneath. So if it breaks these areas, a lot of times there's stops to get hit. And so you can see that 5 o'clock trade right here would have had you long when it broke out over this bar's high here at 73, and price basically went up 70 pips. If you miss that trade, this little breakout trade right here went up about 30 pips. And that's how you use a currency meter, as an anticipatory tool to find the highest probability trades. And some days you have currencies that are one currency's up on all time frames, another currency or two are down on all time frames. Those days are easy to trade. And other days like today, you have mixed trades. You can see the euro real-time strength's up, 15-minute, hourly's up. The daily and weekly are pretty weak. The monthly's up, so it's mixed. And a lot of times traders don't know how to use multiple different time frames. It's all about probability. You can trade fewer lots with the riskier trades and trade more lots with the higher probability trades. On some days, 1 out of 8, 1 out of 10 days, 2 or 3 currencies are up on all time frames, 2 or 3 are down on all time frames. And you have dozens, literally dozens of trades that pretty much almost the vast majority of them work that day. That's easy trading days. And other days, it's a little bit harder. So you can see, coming into today, the yen was quite strong on all time frames, and you had a little bit of a pullback right here. And then you can see the weakness got less. At that point of the day, the yen's likely to resume its uptrend. So, you can look at that earlier today around 2 o'clock. Which one, as this thing the weakness starts to fall off, it was going up. Could you trade this against? I don't really like the dollar yen because it doesn't move too many pips. So we're looking for a currency that's likely to go weak again. You can see the Swiss had a lot of weakness earlier, and most of the time frames are down. The pound as well. So let's look at, coming up to midnight, a pound yen sell, because we're anticipating the pound, which is weak on most time frames, to be weak again, and we're anticipating that the yen resumes its uptrend with a lot of intensity. And sometimes it happens, sometimes it doesn't. When it does happen, one of the reasons why we use this currency meter is that trades at work tend to be very significant in compared to how much you lose if you're wrong. So let's look at the pound yen starting the day at midnight. Weak pound, strong yen, and you can see you got a little bit of a pullback right here. Here's the previous day's previous day's low, I mean. So we had a little bit of a pullback. If it goes below that low here, you can go short. And you are watching real-time momentum. If you see a lot of weakness come in, it's likely to break the low. If it doesn't, you want to see. So it really hasn't even broke down yet. All right, so you'd be short somewhere around 96 here. There's not a whole lot of weakness yet. And you can see it's come down. It's kind of going sideways. So your initial risk you cut in half. Because usually if a trade is this weak and you get a pullback trade, it's either going to work or you're going to have a loss. So you might as well have a much smaller loss if the trade doesn't pan out. So at this point, it doesn't look like it's going to work. You could get out of this trade with literally a 2 or 3 pip loss if you wanted to, or hold on and wait for your stop to get in and lose 5 or 6 pips. You can see the momentum is increasing. So if it breaks down through the low again, you can take another. I prefer to have 2, 3, 4, 5 pip losses, get back in, and I'm really anticipating that trend continuing. The previous low right here is oftentimes where it's going to go, so we only have another 5 pips. Unless it breaks this low, we got to consider getting out of part of our trade. You can see the weakness intensified, which is good. The trade should work now, so I'm going to move my trade down, my stop down. With intensity increasing like that, it shouldn't reverse. The only downside is the previous low is right here at 80. It has to penetrate that, which it does. So we're up almost 8 or 9 pips already. Move your stop down. And it seems to be kind of hovering right underneath those lows. You can see it intensified on weakness here. And if it doesn't explode down, I'm going to exit half my trade, just because usually false breakouts tend to just go sideways and then they reverse back up. So I'm going to exit half my trade here just because the weakness got less. And I'm going to leave my stop up here. We're going to make about 7 pips on half and maybe 14 on half. All right, so we're out. You can see that's how you use the currency meter to anticipate, trend continuing. And if you look at this throughout the day, you can see the Swiss was very strong today. The yen was very weak. And anytime you have a pattern like this, extreme weakness followed by very little strength, usually the momentum is going to continue. It's kind of like a 350-pound football player that runs fast as you can imagine. You're not going to be able to stop that football player. So you might slow him down a little bit, but his momentum is going to continue. Same thing with the market. So strong Swiss, weak yen. This is one of those things that's likely to continue up, and you can see it did. Even though, look at back here, 3 o'clock started to have weakness in the yen. 3 o'clock started to have strength in the Swiss. Right? This just continued and continued, and it went up over 100 pips. And basically, there's 2 methods that we look for to get into trades: pullback trades and sideways rectangle trades. This is a perfect example of a sideways rectangle. Anytime you have a market go sideways from a half an hour, I prefer, at least hour and a half. This is kind of a flag pattern, breakout, continuing on up. You would have been long here at 83.40 with your stop a pip or 2 underneath these little sideways rectangle bars low. You're risking 10 pips, and in this case, it just continued up. A lot of times in these breakout trades, you can just keep moving your stop up underneath the lows. We made a higher high. Here's the pullback. You bring your stop underneath here, and most of the time it's not going to go up more than the next fib target. So this fib area here is a very high probability maximum profit. You're out somewhere around 84. You're in this trade at 83 40, you made 60 pips on there while risking 10. And again, that's the key to trading. You can't really even concern yourself with whether the trade's going to work or not. It doesn't matter. You manage the trade once you're in it. You move your stop in half as soon as it goes 5, 6, 7 pips your way. You move your stop to break even once it goes 8 to 12 pips your way. If the market goes up to 8 to 15 pips and it looks like the momentum's slowing, exit half and trail the rest. It's that simple. Use support resistance to exit half your trade if the market stalls there or if the momentum, dies right near one of those support resistance areas.